Welcome, dear traders. You are watching a recap of the Asian session on August 18. After US data and a sell-off on Wall Street yesterday, stock markets in the Asian-Pacific region are likely to end this trading week with the most indicators falling. In addition, the stock markets experience bearish fluctuations amid the growing crisis in the real estate sector in China. Concerns about China's economic recovery continued to mount today. As we reported in yesterday's video review, China's house price index fell into negative territory in July. In addition, major real estate developer Country Garden Holdings was in default on its debt payments. Yesterday, China Evergrande Group, China's second-largest developer, filed for bankruptcy due to a lack of funds. The debt crisis is worsening and threatens to wipe out the entire real estate sector, which accounts for a quarter of China's economy. Amid these concerns, leading US banks such as JP Morgan and Barclays have recently lowered their growth forecasts. Fitch, the largest international credit rating agency, is also reviewing China's sovereign credit rating. Against this backdrop, the yuan is under heavy pressure. Also, this week, the interest rate spread between China and the United States has widened to its highest level in 16 years. China's largest state-owned banks are selling US dollars to protect the weakening national currency, and the Chinese authorities focus on keeping the exchange rate stable as they seem increasingly unhappy with the weak yuan. In addition to buying the yuan, the People's Bank of China also set its daily fixing and promised to ensure a stable exchange rate. At the same time, the regulator warned speculative short sellers to not bet against the currency. As a result, the measures worked well after hitting a 9-month lows earlier in the week. The Chinese currency strengthened significantly today. Meanwhile, yen bears need to no warning, and the Bank of Japan welcomes the Japanese currency's downtrend after yesterday's sharp drop to 145.70 from 146.30. The yen has begun a more gradual decline. On a Friday, the yen continued yesterday's pullback. In the Asian trading, the dollar-yen pair is moving within a bearish channel in the range of 145.10 and 145.90. However, despite the decline from the early highs to 145.20, the Japanese currency may still move in the intervention territory. However, bears found support in the pullback in the government bond yields and optimistic data on Japan's consumer price index. The data released today indicated that inflation was flat. Contrary to expectations of a sharp slowdown to 2.5%, it held steady at 3.3%. At the same time, the core consumer price index slowed to 3.1% in July from a 3.3% in June. Nevertheless, this reading is still far from the 2% target. With inflation remaining elevated for the 16th consecutive month, the Bank of Japan's ultra-loose policy is questioned. Perhaps the yen is strengthening today on this. In addition, the Japanese yen may attract investors as a safe haven currency amid the crisis in China and the sell-off on Wall Street. But the US dollar status as the main safe haven currency remains unchallenged. The US dollar is strengthening after the minutes of the July Fed meetings. Meanwhile, the regulator intends to continue raising interest rates. The Fed's future decisions will largely depend on incoming economic data, and this week's data showed that the US Central Bank is likely to remain hawkish. For example, retail sales rose for the fourth month in a row in July. Consumer prices also surged to 3.2% in July from 3% in June. The decline in unemployment claims showed the resilience of the US labor market, pushing the yield on the 10-year Treasury bond on its highest level since 2007. Notably, US economic statistics have steadily exceeded market expectations throughout the first half of 2023. As a result, the US dollar is posting green figures for the fifth week in a row. After retreating to the area of 103, the greenback also spent the beginning of on Friday in the green price range of 103.20 and 103.50, and this week the US currency may strengthen against most major currencies. However, the US dollar is still declining against the British pound. Therefore, the US dollar index ended the Asian trading session with a moderate surge, closing at 103.50. The Australian dollar is depreciating after yesterday's weak trading on Wall Street and the negative news from China. In addition, downbeat growth forecast for the Chinese economy are harming commodity assets. In addition, Thursday's disappointing Australian employment data put pressure on the Aussie. As a result, the Australian currency is declining within the range of 0.6391 and 0.6430. On a Friday, the Aussie priced 0.6400 twice and closed at 0.6395. The weekly low of 0.6364 is now offering support. In addition, the currency may slide to 0.6350. Friday did not bring any positive news for the New Zealand dollar, and the decline in the Chinese market, New Zealand's main trading partner, is slowing down the New Zealand economy and the strengthening of its national currency. The Kiwi failed to strengthen today amid the temporary weakness of the US dollar. As a result, the Kiwi dollar pair slumped to 0.5917. By the end of the Asian trading session, the Kiwi spent Friday morning in the red between 0.5916 and 0.5945, trying to recover from its 9-month low. Against the backdrop of traditionally low trading volumes in August and few drivers for market movements, investors are now turning to the Jackson Hole Economic Symposium. Representatives from the world's central banks will be attending the annual conference next week. The G20 summit, which will take place in New Delhi, India, on September 9 and 10, will also have a major impact. The biggest impact burden on the Indian economy is the oil prices. As a result, inflation in the country has risen to a yearly high of 7.4%. The Indian rupee, under pressure from capital outflows, has fallen to a record low of 83.10 against the US dollar. The Indian currency also dropped to 90.30 against the euro in the early Friday trading. At the same time, the rupee has gained 1.74% in the past 4 weeks. And that's all for now. Leave your comments down below and don't miss our next video review. Remember that staying up to date is a key to success in trading, and see you online soon.